Let's dive into how to prepare a cash forecast using master budgets. A cash forecast is an essential financial tool that helps businesses manage their cash flows effectively. It's a prediction of future cash inflows and outflows over a specific period. Now, let's see how master budgets assist in creating a reliable cash forecast. Firstly, what is a master budget? A master budget is a comprehensive financial planning document that aggregates all individual budgets within an organization, such as sales, production, and direct materials budgets. It's essentially a financial roadmap that provides insights into expected revenues, costs, and expenses. By using a master budget, businesses can ensure all departments are aligned with organizational goals. To start the cash forecast, we need data from the sales budget. The sales budget outlines expected sales in terms of both volume and value. This information is critical for determining future cash inflows, as sales revenue often represents the primary cash source. Once you've got that compiled, link it with the collection schedule to predict when sales will convert into cash receipts. Next, consider the production budget, which determines how many units need to be produced to meet sales goals. The cash forecast must take into account the timing of cash payments for manufacturing expenses. Examine the direct materials budget to schedule future purchases and their associated payments. Remember, not all expenses are paid immediately, so align payments with when cash actually exits the business. Now, integrate the information from the labor and overhead budgets. These identify costs related to wages, rent, and utilities. Time the corresponding cash payments appropriately. Incorporate these expenses into your cash forecast to ensure you have a realistic view of future cash outflows. Additionally, review the capital expenditure budget. Any planned investments in new assets like equipment should be included as cash outflows in the cash forecast, keeping in mind the payment schedule. Combine all these factors and you will have a complete picture of cash inflows and outflows. By aligning the master budget with cash forecast, you can ensure that your business maintains sufficient cash reserves, anticipate cash shortfalls, and plan for surplus. This approach not only promotes financial stability, but also positions the company for future growth. And there you have it, a comprehensive way to prepare a cash forecast using master budgets.